chairman starts sharing the valuable insights, I would humbly request Sonia ma'am to please take the lead and set the context of this webinar.
Thank you so much, Bharat. And friends, a very good afternoon to all of you and welcome to the ROI show. Thank you for joining in today's session. And like Bharat said, I'm Sonia Chaudhary, I'm the MD, and we have Mr. Gaurav Maria, who's chairman of the Franchise India Group, who comes with a very vast and rich experience of working across different industries, different markets, and diverse range of businesses at different stages of their life cycle. And so there are three sessions on ROI. Yesterday, we talked about ROI, calculation of that, the financial return for an investor, and I'll also do a little recap on that. Today, we're going to cover the different formats in franchising. And there are many questions that we receive because we work with a lot of investors across the country. We get a lot of inquiries on understanding of the different formats, which are very, very prominent in franchising. So before I go there, I'll also like to give you a little brief about our company, Franchise India. And most of you who would have joined would have been following us or might have even taken some businesses from us in the past. So Franchise India has been working for the last more than 2.5 decades with entrepreneurs, aspiring entrepreneurs like yourself, in helping them start a business. And our group currently operates in about 97 cities in India. We're there in 14 countries across the globe, which also makes us the world's largest franchise development and distribution company. And our expertise largely lies in franchising, which is our core, licensing. We also work in mid-market M&A and a lot of market entries that we have been part of in the last, I would say 20 odd years, more than 1,000 companies we have got in Indian market and also the subcontinent. But something which has remained very, very important to us is the trust that we have of business buyers like you, which has also evolved, I would say, over a period of time. And our focus has always been to remain investor-centric and franchise-focused. And education sessions like these help our investors to take an informed decision on buying a business. So I think yesterday, I'll do a quick recap of what we did yesterday. We talked about the ROI and the various factors that influence ROI. And we covered on the initial, so the factors broadly, if I talk about, there are 4 areas on the initial investment, which includes your investment, which is your capex, the inventory that you keep in the outlet. The second is the revenue generation. The ability of that investment to generate revenue significantly impacts the ROI. Yesterday, we also talked about the operational efficiency, which is efficient operations. And if there are proven systems and operations which a franchisee is trained on, it can very significantly lower the cost and boost the profitability, which enhances the return on the investment. And then comes our market conditions, which are economic conditions, market conditions that can also affect the performance of investments. And we looked at 2 aspects of performance of a business. One was on the business front and the other was on the personal front. On the business front, we talked about 5 areas, which is first and foremost, lifetime value of the opportunity, which means how long can the business generate revenue and remain relevant. The second was the industry the business operates in, whether that is future fit, is it going to be relevant, say in the next 10 years, 20 years of the existence. The third, we talked about market conditions and also the market fitment. Is it the market right? Is there a demand of that product or such service in your market for that particular business? The fourth area that we covered was also the cost of capital, which means maybe any kind of loans which a franchisee takes or debt he takes to start a business eventually also impacts the ROI. Because, for example, if an investment of 20 lakhs is done or required by a business to be done, it eventually goes up to 25 lakhs because your interest rates also change time to time. And the fifth area we talked about was inflation, which is the cost of your raw material, your stock, your input, and also escalation of costs like salaries, rents year on year. The second parameter that we took also was on the personal front, which is the overall, I would say, investment horizon for a business owner who wants to take up the business, which is split into short-term goals, mid-term goals, and the long-term goals. And the second area was the risk-taking appetite that we talked about. So depending on the risk appetite of an investor, there are different business opportunities that he can take over. And finally was the investment goal, which means we talked about different asset classes, and we understand any asset class is fundamentally, split into the following goals, so to say, which is safety, income growth, and risk and reward ratio are very proportionate to this investment goal. So today we'll talk about different models that we have in franchising, which start, I would say, from franchisee-owned, franchisee-operated to franchisee-owned company-operated models to BOT models. And there are a lot of companies today who follow different models. We can even give example of these companies today that we work with. I'll also request all of you to also, share a bit about you. If you're already running a franchisee, exploring already some options, closer to finalizing anything, you can share with us. And if this is the first time you're getting into franchising, we'll be happy to hear from you. Already a professional wanting to get into franchising or start a business, we'll be happy to understand where you all come from. Now, if you look at starting business as an idea, there are only three ways somebody can look at starting a business, where the first and foremost, I would say, people can do their own startups, and we see a lot of these startups coming up and starting their businesses. The second way they can start a business is buying something which is already running, which is business resales, which means somebody is running a business and you take over that business, acquire that business and run. And third is franchising, which is a tried and tested model. You take the SOPs from the companies, you get trained on their business model, and you replicate the success of the brand. So at Franchise India, we work the later two, which is business resales and also franchising. And a lot of considerations come in when we look at franchising as a business model, because like I said, it is a proven business model. Investors, entrepreneurs, franchisees can access the equity of the brand, the strength of the company, a lot of operational expertise that comes into the access and ongoing support, which also paves a very strong way for a sustained profitability for the franchisee. So if I talk about the strength of the brand or the equity of the company, a strong brand also equates to very big customer loyalty, which is very critical driver for ROI and for franchisees that can benefit from brand building and also ensuring a steady stream of cash flows. And the second area is operational success. So franchisee becomes equipped with tried, tested operational systems. These systems, in fact, reduce the learning curve for any new franchisee, which allows them to hit the ground more quickly and provide them with comprehensive training, which includes training on their product, any new innovation that company brings in, the marketing strategies which the company uses in diverse markets, supply chain and other logistics. And then comes the community engagement, which is also extremely important, which is, I would say, very, very localized. So localized marketing and community involvement enhances the ROI for a franchisee. And this is also one reason why the same brand in different markets would not give the same kind of results. So friends, we'll talk about the different formats. And before we do that, there's a small presentation, I would say, a few slides that we'll take you through. And we'll also explain you different models in franchising that are currently significant and penetrating. But before that, I'll request Gaurav to set a perspective and like I said, make the session interactive. Any questions you have, please ask. We'd like to know more about you, where you come from, what city you come from. So please be free to write your comments and questions in the Q&A box. Over to you.
Thank you, Sonia, and thank you for setting the perspective. And welcome, friends. Welcome to this ROI show. This is a 3-day series, which we did yesterday, today, and tomorrow. And we'll talk about a webinar for you to get basic information on how to choose a right franchise, how to calculate right ROI, and also other things before you make a big investment of starting your own business. So friends, as Sonia said, I'll summarize. There are 4 steps when you look at starting your business. First step, I call the 4 steps of selection of a business. The first step is connecting 4 dots. First dot is choosing the right industry. It's very important what industry you would like to get into, because not everything would fit with your aspirations and your experience. So what industry you choose, why you think that the industry is right, what kind of things are changing, are happening in the industry, what kind of disruption that are happening in the industry, who are the main players in the industry. That's a very, very important aspect. A lot of people just jump into an opportunity. They don't understand the industry so well. Like we get a lot of passion, and most of them don't understand the industry so well. It's one of most complex businesses to manage. Food is very, very complex, but still 35% of all.
Friends, I think there's a bandwidth issue. Tamara would just join very shortly. And in the meantime, I'll request if you can just share a little bit about yourself. We'd like to know more about you.
Can you hear me? Can you hear me now?
Yeah,
Yes.
seems okay now.
Sorry, I think. So first is the industry. The second piece which you have to also connect is very important is the brand which you want to choose in that industry and why you're choosing this brand over any other opportunity or a competitive brand. That's also very extremely important for you to do it. And third is your own financial goal. That also has to match.
Welcome, Vignesh. I saw you writing in the Q&A box. We have Vignesh who's joined us from Tamil Nadu, but there's a very big audience that has joined in. I'll request all of you friends, please write a little bit about yourself in the Q&A box. There seems to be a little issue with the bandwidth. I will wait for Mr. Maria to join back. But in the meantime, I'll request all of you keep writing in. It helps us engage better and also understand our audience better. And if you already run a business, please put that in a Q&A box. If you already run a franchisee, we'll be happy to hear from you. And we'll also call out your name and the city that you have joined in from.
My apologies. I think there's some internet issue at where I'm. You can hear me now?
Yes, we can.
Okay. So I'll repeat the whole structure. So there are 4 stages of when you're selecting a business. First is the connecting 4 dots. And the first dot is the industry. Why are you choosing that industry over any other industry? And what is your fitment with that industry? That's first point. The second is choosing the brand. And you also have to see why you're choosing a specific brand versus competition. Say, for example, you want to go to jewelry. Now, today we have so many choices in these brands. You can take Kalyan, you can take Tanishq, you can take any other jeweler. So almost every leading jeweler is franchising now. But why would you choose one over other? Right? So that's very important. Third is your own financial goal, which is very important. Sometimes we're just interested in taking an opportunity, but we don't understand our own financial goal. What is your immediate financial goal? What is your long-term financial goal? What is the value creation which you want to see? And fourth is your micro market. How Ahmedabad would behave to a Baroda, to a Surat are very different, right? Even there, within that also, there are micro markets which would differ in terms of how your performance would happen. So connect these 4 dots. And if you feel all 4 are matching with you, then only you go to the stage 2. Stage 2 is evaluating an opportunity. How do you evaluate opportunity? I have 3 simple steps to evaluate opportunity. 1, lifetime value of the opportunity. What is the life of opportunity, right? Second, what is the, how easy is this business to run? Because sometimes it can be great opportunity, but it's not something which you can manage. So how easy is that opportunity? Sometimes very lucrative and attractive opportunities are very complex to manage, right? Third is what is the exit and a final value creation which you can see in this business. Eventually, when you invest, you also have a starting point and you also should have an end point of how you want to get in it. And I believe that if you build a profitable, successful business, you should look at a good exit out of it. Your wealth creation would only happen from that. So that's your evaluation stage. Third stage is how to manage your finance, how you're funding your business. And this is where most of the people go wrong. They have not right funding, or they over leverage themselves, or they don't have enough working capital. 70% of all businesses fail because they don't have adequate capital to support their business, especially on a working capital side. So I have a rule called 60-40, which means that if a business requires X money, you should have a 40% extra to support your working capital, because gestations can take anything from 6 months to 1 year before the business has positive cash flow. And finally, there are 4 fits required as an individual when you look at your business. What I call the strategic fit, operational fit, financial fit, and marketing fit. But there is one critical fit, particularly for a particular industry you want to. Like, for example, if you're taking food, operational fit would become very, very important. It's operationally very demanding. But if you're taking a jewelry franchise, it is a large financial fit. Or a hospital, it needs a larger financial fitment which needs to be done. But if you're taking a concept which needs go-to-market capabilities, then maybe marketing fit is important. But if you come to retail or fashion or something like that, maybe strategic fit, which is the strategic location which you need to do. So ask yourself, when you're selecting a business, do you have that critical fit available with you? Well, all 4 are important, but there is a critical fit. Take these 4 steps and you will be able to make the right decision to start a franchise. Now, going to the next point, before we get into the formats, there are 15 things which you need to really find out or investigate before you get into any franchise. And you can make notes on that. But I will also say that you keep putting these 15 on the chat box. And friends, write in the Q&A box any questions you have, any information you want, or any brand information you want. You can write on the Q&A box.
We have Mr. Rajesh Seth who has joined in. He said you were saying something about the food franchise percentage in India, and if you can repeat that.
So 35% of all franchise buyers actually come for food franchise. And I also should share, which can sometimes scare people, most of the failures in franchising happen in food because it's operationally so demanding. And most of the people who take the franchise are amateurs who have never run food business, and they're not trained on that. So hope I answered the question. So let's get on to the 15 points which you need to see or investigate before you start a franchise. First is industry. What is happening in that industry? Right? Today, almost everybody is coming to us, which comes to us for an auto franchise, which means in a 2-wheeler or a 4-wheeler franchise. They are not sure what is going to last. Conventional auto companies or the new EV base. While you can invest into EV, but has a higher gestation, it's still not an entire thing. But you know the future lies with EV, right? So how do you really investigate that industry? What is happening in the industry is very, very important. Stage 2, when you invest into a particular brand, more than the brand, investigate about their founder. What is the founder story, right? Are they committed to run and establish this business? Why do you think that they are the best people to run and manage that brand? Spend some time with the founder himself and spend and understand what is their vision. Because if they are not having enough vision or enough commitment to the business, you as a franchisee will never get it. Third is the business model. Business model is equally important. And you need to see, is the business model has enough margins available for you to exist? Because there are 2 stakeholders, a brand and the consumer, and now you're coming in between as another stakeholder. There are enough margins available in the whole system that you have, you can also make money out of this. All 3 stakeholders can survive, which is the consumer, you as a franchisee, and the franchisor. Then get on to financial model and understand the microeconomics of that financial model. What is the cost of acquiring a customer? What is the cost of delivering a customer, right? What is the kind of operational cost you need to do? As Sonia said, what kind of inflation would hit? What is the year 1 for you? What is the year 2 for you? What is the year 3 for you? Rather break that into quarters, that how you can really see. Is there a business which has seasonality? All that pieces has to be done to find out what kind of returns you can expect on that and create your own forecast on that. Don't just read into basic Excel sheets provided by brands. You need to build your own financial model. Only when you make your own financial model, then only you're successful. Fourth is, how is the supply chain going to work? What kind of supply chain? It's the 5th point. What is the supply chain? What kind of a support which would come from a franchisee? 6th, which is very, very important, is the training. What is the startup training and what is the ongoing training? And is there a cost to it? Sometimes people just get into business and franchisors claim that they are going to support you completely, but is there a training model available? Right? One of the companies I was advising, very large fashion brand, and they had, franchisee not performing. When we did the audit on them, we found that they had no training. There were not even basic training for local store marketing, getting customers in. There were nothing available like that. And so a lot of companies have a poor training structure. And one thing I learned over my 30 years of working in this industry, companies which have a strong training capabilities are normally high-performing companies because they train on the values, they train on the systems, they train on processes, and then only you are successful in that. Seventh point is what kind of marketing support company is going to. And marketing is also very wide. It's from the launch to ongoing to local store to social media, all that pieces you have to understand. Eighth is a internal team hiring support and team training support, because that's something, especially if you say start a food business. I mean, your critical piece is your staff. How the company is helping you to hire people, back of the house, front of the house, and their on continuous training structure. And is there some kind of a ongoing upgradation on training which is coming from them? That's a very, very critical question. I feel out of the investors, 10 investors we will get, 9 would never ask about this. And this is most critical part of the business. Then you need to also understand that are they giving you real estate support? Because every business needs to be at some real estate. Is the company ready to provide you that real estate support to find the right location for you? If you not need a location in a shopping mall, are they working with shopping malls to get you the right location, or it is a high street property or any other commercial property? Then we need to also understand, which is the 10th point, is there additional investment required in the business? Sometimes you don't understand, you start the business, and after 1 year, the business needs reinvestment, and you don't have that capital, or you never put the provision as a capital. Like in some businesses, you need to increase the stock levels. Say if you're running a jewelry business or any other business, particularly at a particular time, say Diwali or entire thing, your stock levels have to go up. It would need reinvestment. Is your franchisor defining that additional investment or any kind of renovation required or any kind of new equipment being to be done, which all needs the reinvestment? And if there is a reinvestment, you should have a provision for that. 11th point is technology. No business can last without technology today. So what kind of technology the company is providing? It's just not point of sales, but any kind of supporting structure which they provide. 12th, again, a very, very critical point is that is there a exit and transfer rights available in your contract? Right. Very important point, because tomorrow you build the business, you're 2-3 years in the business and you want to exit the business. Or for other reasons, you want to sell the business or transfer it to somebody else. Most of the times in franchisees would ignore this step. So you need to really understand, is there an exit or a transfer rights available in the business? Then another point, which is the 13th point, what is the renewal cost? And what is the term and how much it's a renewal cost for you to get another term? You did very well 5 years, and after 5 years, you suddenly realize, I cannot renew for the next 5 years. Or the franchisor is asking for another renewal fee, which you don't want to appreciate. So you don't want to discuss after 5 years. This should be part of your discussion before you're buying a franchise. Then another area, 14th point, which is a territory protection. This is a big complaint. People, when they start business and they start later complaining that more and more are opening near me and I'm eating out of my business, which I built in that territory. So very clearly define your territory protection. And last, which is not least, but 15th point is, if you did well, what is the growth story for you? Can you take multiple other franchise for the same brand because you've done well, or you can upgrade to an area developer or a master franchise? So all these 15 points, and there can be more, you need to be ready to ask the right question, investigate enough before you invest your business. I call the 3 stages of buying a business, which is information, which you can do to coming to Franchise India or visiting franchiseindia.com or visiting our shows. Evaluation, which our consultants help you to evaluate the right opportunity. And finally, right negotiation before you make your investment. So now I'll pass it back to Sonia to talk about different formats of franchising. And friends, you can write your questions in the Q&A box. We are happy to take that questions.
Just allow me a moment. My screen, full screen, visible
Yeah,
now?
yeah, visible.
And so Before we go into formats and different types, we want to broadly classify the industry into a product-based industry and a service-based industry. So typically all the retail businesses that we see, we talked about jewelry, furniture, anything which is inventory based comes under product-based businesses. And then we have service-based businesses, which are largely franchisees that come under services like F&B services, your gym, salon, education. All these industries, they come under service-based businesses. So if we have to take, some of the elements, if we talk about product-based businesses, it requires a larger amount of working capital deployment, which is the inventory, the stock rotation. So product-based businesses have, rely very heavily on the stock, which is there in the outlet, and number of stock rotations, which also are different category to category and different industries. And most of these companies only charge a very small franchise fees, unlike the service-based businesses. In product-based businesses, the component of franchise fees is comparatively low because the company only wants to cover their cost of acquisition. And the ongoing revenue, or I would say margins, is made on the supply which the company gives to a franchise partner. On the other side, the service-based businesses, for example, F&B salon, gyms, they have one component of a franchise fees, which is comparatively higher than the product-based businesses. And the second is the royalties which they charge on the overall sales. So the royalties only charged in service-based businesses. Product companies don't charge any kind of royalties because they make revenue, and so would the franchisee on the margins on the supply chain. And these royalties are paid on a monthly basis on the overall revenue which a franchise makes. In certain cases, if the format is small, maybe I'm doing a small food kiosk, companies can also decide to charge a fixed fee rather than a percentage. So the percentage typically in service-based businesses can start at about 6, can go up to 15% depending on the category industry they are in. Now, there are 4 different type of franchise arrangements that we see, and depending on the nature of the business and also the profile of the partners. So first and foremost, unit franchisee. We have a lot of franchisees in India, and especially all the developing economies. For example, US has more of multi-unit operators and very large operators who operate 100, 200 locations also in a region. Unit franchisee typically would own and operate the rights of a single unit in the area that he wants to operate. He does not get any exclusivity on that territory. And most of the times, the profile of the people which is required and why it is done is people who are operator franchise partners. They need to put a lot of their operational time in the day-to-day operations of the business.
Just to add on that, unit franchise also further is divided into 4 different types. One is franchisee owned, franchisee operated, which means that is independently owned, independently operated business, and you run and operate the business yourself. Obviously, it has a higher return, but it also has higher risk. Then there is a format which is run by a lot of corporates now, especially Tatas and Kalyan Jewelries, and a lot of these are called FOCO, franchise owned, company operated, which means that you input the money, but company run and operate the business. Assets remain in your name. That's why it's called FOCO, franchise owned, company operated. You own the assets, but company is running and operating the business. Returns become lesser. And I also should warn you that sometimes some companies would offer FOCO and give higher returns, which cannot work, right? So which means they're in the greed of just selling more franchise. They create these models. Franchise India never encourages that kind of models. Ideally, in a FOCO case, the returns is much lesser than a FOFO, franchise owned, franchise operated. There is also another format, which is FICO, franchise invested, company operated, where the asset also goes to the company. You're just an investor, but you have to be careful to see how you get returned your capital. While you get return on your investment, which you've done over the months, but your initial capital also has to come back. This sometimes people miss. So FICO is all about that. And then there is another format called COFO, where company owned, but franchisee run and operate. This is done only in a very rare case where you need an operator. Now it's becoming very popular in Europe. So unit franchisee as obligation, ideally for most of the cases, is FOFO, franchise owned, franchise operated, where you take charge of the business, you are trained on that business, and you run and operate that business. Back to you, sir.
Multi-unit franchisee, as the name suggests, a partner can take multiple locations, which can be ideally in the same city, but can also be spread depending on the format. In most of the cases, a multi-unit franchising starts anything upwards of 3 units, which a franchisee takes. And it is needed by companies for a larger penetration or, to cover the area so that they're able to address a larger target audience. And this is more prevalent in fashion retail businesses. So most of the fashion companies from Reliance down the line, all these companies follow a multi-unit franchise model. And we also worked with companies like Quality in way back when we created their business model. They used to do minimum of 5 locations together with a franchise partner, where they could have maybe upcoming locations, new locations, strategic locations, which could be bundled together for a franchisee to run and operate. And then comes the area franchise model. Area franchise model is where the franchise owner gives you the right to operate in that area. Now, this area can be a city, for example, a city like Bombay or a Delhi. It can be the state itself, which is maybe the entire state of Karnataka, AP, Telangana, Tamil Nadu, or it could also be a region at large, which means somebody takes the right of the entire region, say North India, West India, South or West. And the area franchisee is an extension of a master franchisee, where he also replicates with the support of the master franchisee or the parent company certain roles which are largely supporting the local franchise or sub franchisees under him in getting the location, supply chain, a lot of training capabilities. Also, area franchisee has to build if he takes the right, and more importantly, he needs to have the capability of distribution, which means that he needs to distribute the product, which means to a sub franchisee in the territory. And then comes the master franchise, which in case of international companies, this is the most sought after format which the companies consider, where they give and award the right of a master to a single person in the territory. And master franchisees can further sub-franchise through area franchisee or a multi-franchise. For example, Franchise India, Fran Global, the 2 companies that we run in India international markets. We also own about 45 rights of international brands in F&B, retail, education, wellness, where we have these rights, and we are further sub-franchising these 2 partners. I think we quickly ran through this, so you can also take a screenshot. Franchisee owned, franchisee operated is typically owned and operated by the franchisee. Your margins in the business are higher because you only pay a royalty to the franchisor. Franchisee-owned company operated is where the company operates on your behalf, but the entire investment is done by the franchisee. And the company can choose, depending on the brand, depending on the model and the format. In certain cases, company also choose to take care of operating expenses, or they choose to even split the operating expenses. In most of these cases, the rental part is taken care by the franchisee, and all other operating expenses, including salaries, utilities, something which sometimes the company takes care of. Or in certain businesses, the company can also choose to take a management fee from a franchisee for operating these units for a franchise partner. And then is franchisee invested, company operated. So the difference between the 2 is the asset sits in the books of the investor in case of the ownership. That's the reason we put the word owned. And franchisee invested is where you're passive investor in the business. Company takes care of all the operations, and the company also is obligated to give a return on the investment and also your principal back. And COFO is company operated, owned and franchise operate. The entire investment is done by the company, but all the operational expenses, time is gotten by the franchise partner. And finally comes the BOT model, which is built, operate, transfer. This is a model which mostly cash-rich companies, large companies do. If I give you some examples of these businesses, can be companies like Zudio, who does that, companies like Chroma, who does that, and also Kalyan. They have been building a lot of locations where they take these locations, they make the infrastructure, and then they transfer to a franchise. In case of Tata entity, they generally run and operate for a couple of months before they transfer to a franchisee. So I think these were the broader models that we wanted to bring to you today. Anything that you want to add over and above?
Sure. So these are models, but the selection of a model should be done only by very carefully assessing yourself in terms of what you want to do. If you're looking for a long-term building a business or a brand in a particular region, maybe area franchise becomes a better sense. Rather, Franchise India has always promoted area franchisee because you own the territory, because you put the effort to build a new brand. So you should create the control of the entire thing, and you have different incomes. Not only your operating income coming from the stores or locations you put, but you also get income out of selling franchise further in your region, and also get a share of royalties which comes to entire thing. So that's why we encourage people to take area or a master franchise. And especially if you're looking to start an area or a master franchise, next month, Sonia and I am doing roadshow across India, and you can be part of that. You can come. There's no obligation. We can have a discussion if which kind of brand you're looking at. As Sonia said, we have over 100 international, multinational brands, and we have a lot of Indian companies, over 500 brands, including Reliance, Tatas, and a lot of other established corporate brands. So you can reach us. I have put the number. I think I'll take Bharat to put again a hotline number. If you request on an appointment, we will set up an appointment with you. And if we are not available in your city directly, then our consultants are available. Our consultants are in 90 plus cities. We will set your appointment with them. And this is no obligation. You can spend some time over a coffee or tea and understand these businesses, understand the businesses which you are interested in, and then take an informed decision to start your own business. So friends, this was a short webinar today, and we will be doing again another webinar tomorrow with more information on how franchising works and how should you select the right opportunity.
And we'll cover the legal considerations that you should focus on. So we have a 25 point which we consider mandatory for putting in the agreement. We'll also enlighten you on all these clauses tomorrow. It's about 30 minutes tomorrow. We'll meet you again. Thank you so much, friends, for joining in. I see some of you also put in comments very specific businesses that you currently run and some propositions that you're currently considering. I'll request if we can come on a one-to-one meeting or a call with you to understand and get deeper into your query.
And also, Franchise India is a belief that we don't recommend a particular brand. We take you through a process that you are intelligent enough to take a decision of what businesses would suit you. This is a principle. When I started the business in late 90s, I was very clear that I don't want to recommend a particular brand. People should make the choice what they are intending. But we take you through a knowledge journey that you are become intelligent. Even if you work with our consultants, they would introduce you a lot of opportunities, and then you will be able to understand and assess what is right for you, what is right for your investment and your long-term goals. So I will recommend, if you're taking a first-time business, consult one of our consultants, and they would take you through journey in terms of how you should choose the right opportunity. Thank you very much. Thanks for your time.
Thank you so much.
Thank you
so
friends.
much. Thanks so much, everyone, for joining this webinar. In case if you would like to, if you want that 15 points, of course, we can share it. You just need to call us on our hotline number, 9717-683838, or you can also write to us at feedback@franchiseindia.in. I really appreciate it, sir. Thank you so much for coming to this webinar and sharing the valuable inputs. Thank you, ma'am, also. And tomorrow, once again, we will come up with the new learnings. Till then,